markets and checking in on currencies, especially the euro dollar. You know, we're quite a ways away from the 106 plus levels that we saw during yesterday's session, and both sides of the equation at play here. So more easing expected from the ECB later on today, which should mean more euro weakness. And then the comments from Janet Yellen signaling more hawkish tones to raising interest rates at the December 15th to 16th, meaning some more dollar strength. Let's talk through it. David Pierce, Director, GPS Markets, joining us around the London desk today. David, good to see you.
Thank you.
That
very
is
much.
The expectation. I guess let's talk more about the ECB first, since that's going to take place in a few hours' time. What are you expecting? Some are saying 10 basis points more in negative deposit rates and more expansion of QE by another 10 billion or so.
Yeah, I mean, that's pretty much the consensus. You never know, though, with Draghi. He kind of likes to surprise people every once in a while, and he's pretty aggressive. I wouldn't be surprised if he went 15 basis points rather than 10.
What would be a disappointment?
What would be a disappointment? I don't know. Doing nothing, I guess, would probably be a disappointment to the marketplace. The market would really react to doing nothing. I think doing more is probably not going to be disappointing to the marketplace.
When we see the moves euro-dollar's had over the last 5 weeks, we've gone from above 110 to now below 106, as Susan was pointing out. Has that been more because of the euro side, the ECB side, or is it in fact the Fed side, which we got a reminder of when Janet Yellen spoke yesterday?
No, it's a combination of both, really. I mean, the market does not work in a vacuum, and there are a lot of different aspects that are going on. And if you look at what's going on in the world right now, there's a lot of issues just besides the economics that are really playing on the economy. We have what's going on in Syria, the UK voting yesterday to start doing airstrikes in Syria, and you've got all the refugees that are flooding into Europe, and all of those are people that either need to be supported or paid for by the government, or they've got to find a job somewhere. And when you've got all of a sudden this big influx of people, what are you going to do with them, and how are those people going to be assimilated into the economy? So you've got things like that are pulling on the euro economy in general, which pulls on the currencies. You've got a strong economy going on in the United States, and both of those things work to cause the divergence we're seeing in the currencies.
But have things gone too far with the US dollar already? Because, of course, we've got that monetary policy differential, as you said. Also, we've had a lot of emerging market weakness. So the broader US dollar index against pretty much everything has been incredibly strong. So even though we haven't had this rate hike yet, does 2016, in fact, see a bit of a correction in the US dollar because things are too much priced in?
I don't think right away. We just barely got through the 100 mark on the US dollar index yesterday, and I think that if we break through, we're going to see some additional strengthening in the US dollar. I think for the next few months, we're going to see a continued strong US dollar, especially against the euro. I would not be surprised if we hit parity or even went down into the mid-90s the first few months of the year, because the US economy is really strong, and a lot of this US dollar strength that we have seen really has been on the back of weaker commodity prices as well. As you know, the price of oil has really been low. The supply of oil is so high right now, and there hasn't been a lot of people willing to cut their production. Iran just increased their production by 400,000 barrels a day, last week. And so when you see additional supply coming back into the market, we've seen Saudi Arabia talking about maybe reducing their production by about 1 million barrels a day. But until that happens, I don't see any weakness happening in the U.S. dollar.
Finally, if we see more U.S. dollar strength, a lot of companies are going to be complaining about that. But you actually say that they're simply not hedging adequately. Why is that?
Yeah. You know what? I was just talking to a guy not 10 minutes ago about this, and it was really interesting because his comment was the strong dollar and the weak euro is killing us. And I says, well, are you doing any hedging? He says, oh, no, we don't do any hedging because every time I've done that, it's hurt us. I've been on the wrong side of the market. To me, I think a lot of people, they look at hedging very simplistically rather than looking at a lot of different products or looking at a way to protect the downside and using an option strategy maybe so that they have upside potential as well. They just think about locking into a forward contract. And I think that if you're in a corporation and you're looking at potential still upside in the US dollar and you've got exposure to that, you should be looking for ways to try to manage that exposure rather than just hoping and praying that the market goes your way. I mean, that's not a strategy in my opinion.
That's probably not going to work. David, thank you so much for your
Thank
time.
you.
Appreciate it. David Pierce, Director at GPS Markets.
We're going to get a break.